Welcome back to the Deep Dive. Today we're diving into the world of Thermo Fisher Scientific to help you determine if their stock, TMO, is a good fit for your portfolio.
We've compiled analyst reports and financial data, and of course, company background information, to get a clearer picture.
Let's start with a little history. I know they're a big name in the science world, but how did they get to where they are today?
Thermo Fisher Scientific, as we know it, was formed in 2006 through a merger of Thermo Electron and Fisher Scientific. Both companies already had long histories, dating back to 1956 and 1902, respectively.
Wow, over a century of experience. That's a solid foundation.
Indeed, and they haven't slowed down. Since the merger, they've been aggressively acquiring other companies, like Life Technologies Corporation, Alpha Izar, and more recently, PPD and Corvitas. This growth has made them a Fortune 500 company, with projected 2023 revenue exceeding $42 billion.
So size and history are certainly on their side. But what about their current financial performance?
Their recent performance has been a bit mixed. Revenue for Q3 2024 was flat compared to last year, totaling $10.6 billion.
I see.
The CEO attributed this to some cautious spending in the biopharma sector and lingering economic uncertainty following the COVID-19 pandemic. However, they anticipate sales to pick up in Q4.
Okay, so it sounds like they're navigating some challenging market conditions, but how do they measure up against the competition? What's their market share like?
Thermo Fisher Scientific is a dominant player across multiple industries, actually. They hold significant market share in the life sciences, healthcare, industrial, environmental, and safety sectors. This reach gives them a level of stability and diversification that's really valuable.
Yeah, that's a powerful position to be in. But are they relying solely on their existing market presence, or are they actively innovating to stay ahead?
They are absolutely committed to innovation. One example is their move into gene therapy manufacturing. After acquiring Brammer Bio in 2019, this is a rapidly growing field with a lot of potential.
Gene therapy is definitely getting a lot of attention these days. It seems like they're strategically positioning themselves for future growth.
Precisely, and it's not just gene therapy. They're also investing in cutting-edge technologies, like microchip-based chromatography, a highly efficient method for separating and analyzing molecules.
So they're building a pipeline for the future. Now let's talk about their valuation. What are analysts saying about their stock?
Wall Street analysts are overwhelmingly bullish on TMO. 19 analysts have given it a strong buy rating, with an average 12-month price target of $656.89. This represents a potential upside of over 24% from its current price of $529.63.
That's significant potential return. This growth seems fueled in part by their aggressive acquisition strategy. Can you tell us more about their recent acquisitions and how they fit into the bigger picture?
Their recent acquisitions of Corvitas and Olink Holding demonstrate their commitment to expanding their reach and capabilities.
Okay.
Corvitas specializes in real-world evidence in healthcare, while Olink Holding focuses on proteomics, the study of proteins. These acquisitions provide valuable data-driven insights and cutting-edge technologies that align perfectly with their existing strengths.
It sounds like they're building a comprehensive ecosystem for scientific research and healthcare solutions.
Exactly. They're not just selling products anymore. They're becoming a one-stop shop for a wide range of services, including analytical equipment, laboratory reagents, science software, and even pharmaceutical and diagnostic product development.
It's impressive how they've woven these acquisitions into their existing services business.
And this comprehensive approach has allowed them to play a significant role in major global events, like the COVID-19 pandemic.
Right.
They were instrumental in developing and producing testing supplies and mRNA-based vaccines, showcasing their expertise and manufacturing capabilities.
Their impact extends far beyond just their shareholders and customers. But let's zoom back in and focus on the potential benefits and drawbacks of owning TMO stock. What are the pros and cons investors should consider?
On the positive side, they have strong analyst ratings, dominant market share across multiple industries, a consistent history of dividend growth, and a successful track record of integrating acquisitions. They're also actively repurchasing shares, which can enhance shareholder value.
That's a lot to like. But what about the potential downsides?
There are a few factors to consider. The economic slowdown in China could impact their revenue. As China is a significant market for them, the cautious spending environment in the biopharma sector might also affect their short-term growth. Investors should weigh these risks carefully.
So while there's a lot of potential, it's important to be aware of the challenges they face. Let's dig a little deeper into their dividend policy. What can you tell us about that?
TMO currently offers an annual dividend of $1.56 per share. paid quarterly, with a yield of 0.30%. While this yield is on the lower end compared to some other dividend-paying stocks, they have a consistent 6-year history of dividend growth. In the past year alone, their dividend grew by over 11%.
That consistent growth is certainly appealing to income-focused investors. And what about share buybacks? How active are they in that area?
Thermo Fisher has been actively repurchasing shares, reporting $3 billion in buybacks for the period ending March 31st, 2024. Their current buyback yield is 1.16%, indicating their confidence in their future prospects and their commitment to returning value to shareholders.
It's clear they're taking steps to enhance shareholder value. Now, before we wrap up this part of our deep dive, let's touch upon ESG factors. Have there been any notable controversies or considerations in this area?
Thermo Fisher has faced some scrutiny in the past, particularly regarding the sale of equipment. Allegedly used for genetic surveillance in certain regions of China, they ultimately halted sales in those regions, following pressure from human rights groups. Additionally, they recently settled a lawsuit with the estate of Henrietta Lacks regarding the unauthorized sale of her HeLa cells, though the specific terms were not disclosed.
It seems they've taken steps to address these sensitive issues,
Yeah.
but it's certainly something for ethically conscious investors to be aware of.
Absolutely. Evaluating a company's ESG performance is an important part of making informed investment decisions. We'll delve further into other aspects of Thermo Fisher Scientific in the next part of our deep dive, so stay tuned.
We've covered a lot of ground so far. But I'm curious to explore the potential downsides of their acquisition strategy a bit further. Could they become too big, too spread out?
That's a valid concern. When a company grows primarily through acquisitions, there's always a risk of becoming unwieldy, struggling to integrate all the different pieces. However, Thermo Fisher has a remarkable track record of successful integration.
So they're not just buying companies, they're making them work. How do they achieve that?
They have a knack for seamlessly weaving acquired companies into the Thermo Fisher fabric. It's not just about absorbing products and services, it's about leveraging the expertise and talent that comes with those acquisitions. They understand that a company's greatest asset is its people.
It's like they're assembling a scientific dream team, bringing together the best minds and resources from across the industry.
That's a great analogy. And this strategic approach to acquisitions has been key to their ability to maintain strong performance while growing at such a rapid pace.
It's impressive how they've created this cohesive and dynamic organization. Now let's shift our focus to the bigger picture. How does a company like Thermo Fisher Scientific impact the world, beyond its shareholders and customers?
Their impact is significant and multifaceted. We already touched upon their crucial role during the COVID-19 pandemic, but their contributions extend far beyond that. Their products and services are used in a wide range of fields, from academic research and drug development to environmental monitoring and food safety.
They're truly at the forefront of scientific advancement, enabling groundbreaking research and improving lives around the globe.
And their commitment to innovation ensures that they'll continue to play a pivotal role in shaping the future of science and healthcare.
I'm excited to see what they accomplish in the years to come. Now, as we wrap up this deep dive into Thermo Fisher Scientific, let's bring it all together for our listener. What are the key takeaways they should consider when evaluating TMO as a potential investment?
Here are the essential points to keep in mind. Thermo Fisher Scientific is a market leader with a solid track record of financial performance, dominant market share in key industries, and a commitment to innovation and growth. They have a consistent history of dividend growth and are actively repurchasing shares. Their recent acquisitions have strengthened their position as a comprehensive provider of scientific research and healthcare solutions.
It sounds like a compelling investment opportunity.
However, it's important to weigh the potential risks as well. The economic slowdown in China and cautious spending in the biopharma sector could impact their short-term growth. Additionally, their past ESG controversies might be a concern for some investors. It's crucial to consider these factors in light of your individual investment goals and risk tolerance.
So while there's a lot to like about Thermo Fisher Scientific, it's essential to do your due diligence and make an informed decision.
Absolutely. Knowledge is power, especially when it comes to investing. And on that note, we encourage you to continue your research by exploring our YouTube channel, where we have even more deep dives into fascinating companies and industries. Be sure to let us know in the comments section what stocks you'd like us to analyze next.
We've talked about Thermo Fisher's dominance in the present, but what about their future? What emerging trends could impact their business in the coming years?
That's a crucial question for any long-term investor. One major trend is the rise of personalized medicine. tailoring treatments to an individual's genetic makeup and lifestyle.
Hmm.
This could completely revolutionize how drugs are developed and prescribed. Could Thermo Fisher's expertise in genomics and diagnostics position them as a leader in this personalized medicine revolution?
It seems like they're well-positioned to capitalize on that trend. What other potential disruptions are on the horizon?
The increasing use of artificial intelligence in healthcare is another significant development. AI algorithms are already being used for things like analyzing medical images, diagnosing diseases, and even developing new drugs. Could Thermo Fisher leverage AI to further enhance their research and development capabilities, or even create entirely new products and services?
That's an intriguing possibility. AI could be a game changer for companies like Thermo Fisher.
Indeed. And then there's the ongoing debate about healthcare costs and access. How will government policies and regulations impact the industry? Could changes in reimbursement models or pricing pressures affect Thermo Fisher's profitability? These are all questions that investors should be thinking about as they evaluate the long-term prospects of the company.
So while Thermo Fisher appears to be in a strong position today, the future of healthcare is constantly evolving. It's important for investors to stay informed and anticipate these potential shifts.
Absolutely. Thorough research and a keen awareness of emerging trends are essential for making sound investment decisions.
Well said. And with that, we've reached the end of our deep dive into Thermo Fisher Scientific. We hope this exploration has provided valuable insights to help you determine if TMO is right for your portfolio.
Remember, investing involves inherent risks, and it's always advisable to conduct your own due diligence and consult with a financial advisor before making any decisions.
We encourage you to continue exploring these topics on our YouTube channel, where we delve into even more fascinating companies and industries. Be sure to let us know in the comments section what stocks you'd like us to analyze next. Until then, happy investing.